Good day, everybody. This is the Option Professor coming to you with a very special broadcast where we're going to go over three areas that are, in my view, in our view, are very exciting right now. One is short-term option trading. Why are people doing it? How do they do it? And I've got an example of something that we focused on yesterday that was as an illustration of how it can work and why it's so exciting. Short-term option trading. Also going over some signals that we use on trying to figure out when to buy and sell. So we're going to share that with you. I think that's quite exciting. Second thing we're going to go over is the AI revolution. We've had such a huge run on this stuff. We're going to take a look at some of these stocks and see if, in fact, they may be running out of steam. And if they are running out of steam, what you might want to think about doing right now. Third thing is we are going to go over the Russell realignment. And basically the Russell on June 26th is going to have a finalized list of their realignment. But every Friday, today being Friday, they do a update on it. But we're going to go over some of the stocks that we've noticed are being increased in weight or added to the index. And so we'll see how they're doing, because sometimes they have some shall we say, built-in buying pressure that happens because mutual funds that track those indexes obviously have to rebalance their own things as well. So some pressure, buying pressure that comes into that. We're going to watch that as well. So three big things to talk about here today and go over, and I think they're all pretty exciting. So let's get into it right now. Before we get started, a little introduction. The Option Professor, we've been in this business for decades, and we've done webinars or seminars throughout the country, live seminars, and also we've done webinars. So we've educated thousands and thousands of people on the uses and risks of options. And obviously, you'll notice that we're very familiar with all different markets because obviously after decades in this industry, we know a lot about a lot. What we're not doing is we're not giving you advice. Again, that is for your brokerage firm. So your brokerage firm will determine your suitability and also the appropriateness of any trading to you, not us. So we're just basically providing you with opinion and observation. And as far as any actual investing is concerned, you got to talk to your brokerage firm about that. Okay. And again, with options, there is a risk of loss. So, you have to use risk capital, be aware of all that. Okay. So here we go. Let's get started here today. We're going to start out with short-term trading, and we're going to start out with Lululemon. Lululemon came out with earnings today. And I wanted to show you how we were thinking of Lululemon yesterday. Now, again, short-term options are very risky because why? If you're right, that's going to be great. But if you're wrong, the money's gone, and it's gone all the way. So the bottom line is it's a very feast or famine type of an approach, but it's not illegal. And if you're appropriately suitable and your brokerage firm approves you to do it, then obviously it's something that you could consider. But as far as I'm concerned here, we're going to just talk about how we looked at Lululemon and why short-term trading on the option in this particular case was really a rainmaker. So let's talk about Lululemon and where we were thinking about it. Yesterday, the stock closed at about 328 bucks. Okay. Now you can see here, we have got the charts basically all telling you it's negative yesterday. So why in the world would you even consider anything positive when this chart looks so negative? Here's why. Okay. First of all, I look at this low here and my pointer comes on there and you see the RSI comes in at about 21. You make a lower low on the monthly graph and the RSI still's at 20. So the RSI is not expanding to the downside, even though the market is dropped lower than the previous low. That is something that we view as a bit of a divergence, not a major divergence, but something that we think is a positive. And it is indicating that the possibility of volume drying up is there. And we know there's a big announcement coming today or after the close yesterday with their earnings. So we've got news coming and we've got a market that looks like it's running out of selling steam. That's a positive. Then we turn to the 1-year graph. And we see on the 1-year graph that this thing has pretty much closed that gap. Okay. I mean, it came, pretty darn close to closing the gap. Well, the gap here, actually the gap from the 320 to 330 level, it went in there pretty good. So it's pretty much done the filling of the gap deal. Again, let's look at RSI. RSI on this drop here comes in at about 25. And during the new low, it's only around 23. That's not much of a change in the RSI. So it still looks like it's running out of steam, and it looks like it's filled the gap. So we've got a couple of positive things right there. Then we look towards the 5-year graph. See, this is why we look at different time frames, even though we're doing short-term stuff here in this example. Now, again, you see we came down to the point, right where these averages are. These averages are not made out of paper mache. They're made out of price and time. So we came down and tested that area. That makes it an area we'd want to take a shot, maybe, right? Okay, and let's take a look at RSI here. And look where the RSI came right at the 50. So that's the zone. That's the zone where you take your shot. Now, there you go. On the low here is 56, and the low down here is 56. So there's not much change here in the RSI, even though it's made a new low. So we're starting adding up things. The monthly looks like it's running out of selling volume. The daily looks like it's filled the gap. The 5-year is hitting support. The RSI is hitting support. So we've got a lot of evidence to think that this thing may make a good turn. And of course, we're going into summer. And what does Lululemon sell? It sells high-end athletic wear. And when this weather gets better, people are going to go buy that stuff, possibly. In fact, I think some of the stores are actually increasing their inventory, looking for a big summer season. Now, again, Nordstrom gave us a tip the other day when they said the high-end in consumer is still hanging in there quite well. And you notice Dollar General and Costco is not they're having trouble with their consumer, which is the lower end, right? Or the cheapskate. So what we're saying here is Lululemon got a tip from Nordstrom that the high-end consumer is doing pretty well. Hey, listen, people like this stuff like they like Apple Computer. In other words, they are dedicated to Lululemon once they start buying it. And women basically are a big part of their audience. And let's face it, when the ladies want something out there, they're going to go get it. And as far as this kind of stuff is concerned, there's a big margin of profit in there. So even if they have to discount a little bit, they still make a lot of money. At any rate, so what we said yesterday was, let's take a look at the options that expire today. Obviously, that's a risky option, one-day option, but you've heard these one-day, zero-day options are exploding in popularity. Well, here's why. We priced out, the market was at 328, and we priced out the 325 call. If you're only going to have a day, you probably want a little bit in the money so that even if it only goes up a little bit, you might be able to make out. So the bottom line is that the 325 calls at the close yesterday were about $15. Now, this stock today has hit as high as $386. So since yesterday, that 325 call was in the money by as much as $61 after closing at around $15 yesterday. So this is the reason why people mess around with these high-risk short-term options, because they're limited risk and they give you leverage. When you put up the $1,500 ballpark yesterday, it gave you $32,500 worth of the right to buy, not the obligation to buy, $32,500 worth of Lulu, right? Now, when we're up here at 386, now we're at 369, whatever, the options trading at in the money by at least $43 from 15. Again, it was up at a 61. You're allowed to sell when it's up, But anyway, even if you were still in there now, you still got a heck of a gain. And the question here is what are your alternatives? Now, again, I'm the option professor, so I'm not the guy who fell off the boat. I've been doing this a long time. I've done seminars throughout the country. I've educated thousands of people. And again, this is not a side job I've had. This is something I've done for a long, long time. So I know what the alternatives are right now. And the alternatives are, you could either obviously take your gains and run. You could roll the position out till next Friday and maybe do a call spread with some of the money and see if there's more to come next week. Or you could sell, or you could let it go to exercise. Now, that's if you have $32,500 worth of money in your account that you want to commit to Lululemon. But if you let it go to exercise, you'll get exercised at $325 plus the $15 you spent ballpark. So you're going to be in Lululemon at 340 bucks. Okay. Now, is that a good place to be? Well, right now it's $28 to the good, so it looks pretty good. Okay. And if you think it's going to keep going, then it would be something to consider. But again, if you want to just grab the money, you can do it. Or if you want to grab the money and roll it out till next Friday to see if there's more to come. And since the options are obviously going to be very expensive now, you might want to look at the call spreads so you can neutralize some of that premium. Okay. But again, this is an example of why people do the short-term trading. Why do they do it? Because again, the risk is limited. The reward is not limited, and you've got leverage. Okay. And if you can get it at the right time, it's a heck of a way to trade or gamble or speculate or whatever you want to call it. I find it very, very, and I can see exactly why people are doing it because, you know, if you trade the other risk investments like futures contracts, you're going to have a lot of risk to those things. If you want to do futures options, you're probably not going to have the liquidity that these people have. The bid offers on a lot of these stock options are pretty tight. So you got a lot of reasons why this is going to be very, very popular to use on individual stocks, on the indexes, and many other things. I am very well aware how this all works. On Monday, we're having a webinar, and you're going to be notified on this, or you can obviously go to optionprofessor.com, put in your information, and we'll make sure you're aware of it. And it's going to happen on Monday, where I'll be able to get into a lot more examples and a lot more details. I'm excited about this, not because it's some easy way to make money, but it is a way to try to make money with limited risk and also leverage and with your risk capital, which obviously you're willing to lose anyway. So the bottom line is it is a vehicle that has gained popularity, and I'm definitely seeing why. People who want to do the other side of the trade, the writing side of the trade, you know, that can work very good because if things don't work, these options can shrink, but that's a riskier deal. It's not right for everybody. If you're doing them uncovered, they're very risky. Just think about this. If you would have sold the option yesterday at 15 short, thinking Lululemon is not going to go up because the chart looked bad, now you got to buy it back at 40 bucks or 50 bucks or 60 bucks. You know, you're getting a big whack and that boom hits your account right away. So that's why I'm more interested on this on the buy side. If I can find an indicator like on my RSI divergence and moving averages that tells me not a bad time to take a shot. Example, again, Lululemon yesterday. I just explained why it was a great time to take a shot. Okay, Monday, we'll get into more stuff. Let's go into topic number 2. Topic number 2 is AI. Listen, guys, this AI stuff is for real because, again, it's going to increase productivity. You know, the whole reason the cloud thing got popular, it eliminates jobs. You know what this chat GBT is going to do? Eliminate jobs. And you know what? I mean, I just went to the Circle K to get gas. There's a lady standing there, but basically there's a machine that you do all your paying by. I go to the airport, right? We just got back from a trip for Galapagos Islands and Easter Island, Rapa Nui, huge trip. And I'm going to a lot of airports to get there, right? So the bottom line is what? I go in there and I see you can go and get your food and drink and not even talk to anybody. So again, there's no question that technology is going to be increasing productivity. At any rate, it's not going to happen overnight, maybe, right? So let's take a look at some of these things right now that have really gone through the roof. Let's take a look at NVIDIA. And it's not going to be without competition. On Monday, I'm going to explain a lot more about what this AI thing is all about, what NVIDIA brings to the table as far as their chips are concerned, how much their chips are coming from, where do they fabricate these chips, how much they cost, and why is Microsoft and Amazon making smaller companies able to get access to them at a cheaper price. I'm going to get into all that on Monday. But right now, let's talk about this thing here because I think this thing looks a little bit dangerous. Here we go. RSI on the monthly, 87 on that high point. The next high point still at 87. So you're making big new highs, no new high on the RSI. Then you come up here and the RSI is down to 62. Again, I don't like that. And again, big gap. Okay. So I've been doing looking into the 405 puts, and we got another bite on them today. Take a look at the 1 year. Okay, you got an RSI up here at 82, new high up to 420, 85. That's not much of an advance on the RSI with a big move like that. So it's not in a divergence, but it's certainly not going to the roof. And now the RSI down here is going more like 74. So again, and you got the gap there. Okay. It doesn't look, it could keep going crazy next week. There's no doubt about it. But again, look how far it is away from its moving averages now. So again, there is an area up here. And when I see a big divergence, I'm definitely going to be looking at the puts. We don't have a great big divergence right now. But again, with this 1 month thing getting a little bit weaker here, if we get under 390, if we get under 380, then maybe a full-blown correction could happen. So again, this particular one doesn't tell me too much other than it's very extended. And if you're just beginning to get into NVIDIA, you might ask yourself, basically a limited risk option thing would be the only thing to consider, because you're looking at a pretty big gap there between 320 and 380, and gaps tend to get filled at some point. Again, there could be another run. I guess look at the RSI is 85 at 420, right? If next week we went to 440 and the RSI was at 60, I'm going to be looking at puts. Okay. All right. Now let's take a look at some other guys. We had Broadcom come out. I'm going to look at a few of them here for you quick. Again, on Monday, we're going to have a whole hour to go over all this stuff. I'm just giving you a taste on how I look at it. Let's see what this thing is telling me on a 1 month basis. Okay. Well, obviously this thing went up to 920 at one point here in May, at the end of May. And it gave up the boat pretty fast. Did the 5-day give us any kind of a hint on that? Yeah, this thing's pretty wild. So again, Broadcom, gives you an idea of when they get way away from the moving averages, I'm looking for them to come back down. Okay, so that's why I'm saying that's a good example of why you don't want to be buying up at 920. Again, right now it looks like it's trying to support itself, but it's not one that I'd be focused on as far as a big opportunity is concerned right this second. Could have another run to the upside, maybe go after that 920 again, but not sure of that. I'm trying to find one that might be an exciting time as far as might be ran at steam. Let's look at Microsoft. Okay, Microsoft has highs here at 73. And then we make a new high up here and it's 63. So Microsoft has a divergence. Okay, so let's see how Microsoft does next week, because it definitely has a divergence. That's a divergence. You got RSI at 73 and now you got RSI at 63. Starts breaking under 332. I think you might see some follow through. So keep an eye on that. On the 1 year, let's see what the 1 year looks like. Okay, you have high points here, RSI at 67, and then you get an RSI at 67. And then you got an RSI here at 71. Not a divergence on this one at all. That's why you need to see a little weakness in Microsoft if you're really going to get it to roll over. Again, very extended stuff, though. I mean, that's pretty extended, man. So again, everyone's jumping on that AI train, and it's a train that probably is going to be a fantastic train, but it's a train that maybe is not going to, maybe it's short term. We might be getting near an inflection point. That's all I'm speaking about, a short-term inflection point. Let's see if there's anything else out there that might be telling us. Amazon. Big day today on the markets. Big day in the markets. Hey, the VIX is just at a 52-week low. Okay, and it's a 14 handle. And again, a 61% retracement from 4,800 to 3,500 brings it in around a little bit over 4,300. So as soon as we get a little bit above 4,300 on the S&P, you're going to have a 61.8% retracement of the move, Fibonacci move, from 4,800 down to 3,500, ballpark figure. So again, we're in the neighborhood where the VIX is at 14 and a handle. You're coming into a 61.8% retracement off the drop. So this is a neighborhood where you don't want to jump in with the crazy phenomenons. What you might want to do is think about how to protect some of your assets from that the big gain just had. If you have big gains in it, start looking at hedging strategies, which we talk about on Monday, or reducing risk by doing a replacement trade. We can talk about that on Monday, but this is a time you want to be a little bit more careful with the VIX down at 14, and you're looking at a Fibonacci retracement coming in just a little bit above 4,300 on the S&P. We're going to see how that pans out next week. Okay, I'm going to jump over here because I can't keep on this. We're going to go over a lot more next week. AMD, Amazon, Adobe. We're going to go over Baidu. We're going to go over IBM, Microsoft, of course, Micron Technology. We're going to go over Tesla. We're going to go over Oracle and Palantir. So come back Monday where I have more time to get into this stuff because I don't have much time left. That's why I'm switching over to the weighting on the Russell. That's topic number 3. The weighting on the Russell is going to be changing June 26, but they started the process on May 19. So some of it's already been announced. Let me show you a couple of the stocks that we see have been added, IPOs that have been added. And let's see how some of those have been trading. Okay. This gives you a little bit of an idea of what's been going on here. Hang on a second. Let me get the right chart up here in the last month. Okay, we're going to go with ones that have been added. SIGI. SIGI. Let's go. Here we go. Selective Insurance. Up $2 here today. I'm giving you 1 month graphs. Starting to make a turn. So keep an eye on that Monday. We'll see what's going on because, again, it's being added to the index. When you get added to the index, mutual funds that track the index obviously are going to be natural buyers. Let's go over a few more here while I have a minute. And Ryman Hospitality. Look, that one's up $5. Okay, so you get the idea why we're going to go over the stocks that are being added to the Russell because they have some natural buyers coming in from the mutual funds. And on June 26th, if they know they have to own these things, obviously some of these people are front running them a little bit because look at this stock. It's gone from 88 to 98. And again, no coincidence. It probably got announced that it was going in the index about then. So again, on Monday, we're going to go over short-term option trading, how we get the signals and how to participate there. What's the use? What's the risk? We're going to go over the AI boom and find out if any of these stocks look like they got more legs in them or what might be running out of steam. And we're going to go over the Russell realignment, which I think is going to be very important. And we're going to go over some stocks that are going to be affected by that. Okay, this is the Option Professor. What you need to do now is go to the website, optionprofessor.com, OPTION, professor, PROFESSOR.com, singular option professor. Put your information in there. We'll make sure we notify you and give you the details about Monday's meeting. If you have any questions on what we're talking about here, you can obviously email me at optionprofessor@gmail.com, your questions and your contact information, and we can talk. Again, nice being with you. I'll be with you Monday. Have a great weekend. It's going to be an exciting week.